Hi, I'm Adrian Helfert, Director of Multi-Asset here at Westwood. Just looking back at September brought a continuation in the equity and credit appreciation cycle that stalled about mid-month as we've seen the confluence of the Fed being not so dovish in their announcement, of course the attacks on the Saudi Arabian oil facilities, as well as a little less optimism around trade negotiations. Now, coming into the end of the month as well, we've seen some interesting events that have happened that I think investors should be aware of. First, a continuous and large rotation into the value style over growth style. Now, generally, there's a partition between looking at growth styles versus valuation styles, those that have a low valuation. And for the past few years, it's been very much a growth environment. We've seen a large rotation into value over the course of about a week. That's just a signal for us that we take thinking around, where are we in this cycle? Is it nearing an end of cycle? Secondarily, we saw short-term financing markets that had an extreme close, meaning we saw short-term financing or repo markets that priced in a little bit more of concern around overnight financing, things like we might see at a global financial crisis. That said, these are related to technical factors like corporate tax repayments, treasury coupon repayments. But that said, we always take a signal and are cognizant of things that are going on that might actually affect the overall market structure. So looking where we are right now, we do see some optimism. Certainly we see concern around where valuations are. While they are elevated, they're not nosebleed. On the fundamentals, things like revenue growth, margins, as well as leverage, there are some concerns there, but that's why it's very important to be good selectors at this portion of the cycle. This current earnings season, we've seen a little less optimism over the prior quarters, and what we do see is we see that we can see an elongated cycle, certainly because of more stability, less actual leverage in the market itself. And so we see that elongated cycle giving more opportunity for us to find those selections and produce good return for our investors. We hope to see you soon. Thank you for listening.